logical proof that silver could be in a bubble. At our firm, we have said we do not buy precious metals because there's no way to give it any type of value because it's simply a piece of metal. There are no earnings, no dividends, and no cash flow. So how can you give a value to just a piece of metal? I discovered a good analysis that compares silver to the price of a barrel of oil. Now the comparison goes back 50 years to 1975. And the study showed with oil at $58 a barrel per 1 ounce of silver, well, that costs more than a barrel of oil. There's only been one time in the last 50 years when an ounce of silver was more than oil, and that was 1980. Now that's when the Hunt brothers were cornering the market on silver and it hit $50 an ounce. Over the last 50 years, the average oil to silver ratio is about 3.8 times. Now, using that metric, with oil at $58 a barrel, that put an ounce of silver at only $15 an ounce. The other way to meet that ratio is oil would have to climb to almost $290 per barrel. I don't see oil increasing much above $60 per barrel, if anything at all. I think the more likely outcome would be for silver to decline somewhat. I don't believe it will crash to $15 per ounce, but I do believe it is possible many who hold silver will not be happy losing their profits if silver declines. Researchers also point out that about every 10 to 20 years, silver becomes the hot investment that ultimately falls back down to a normal value. Could that happen in 2026? The only thing in silver's favor is we could have lower short-term interest rates, but the question is that already baked in to the price of an ounce of silver? I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, be sure to get a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.